Hello traders, today is day number 72 of small cap market open test trading. We took one trade this morning, so we're up to 86 trades. We want to take it to 100 before we conclude the test. And today was an interesting trade. I'll show you why. First of all, the small cap screener is looking pretty poor today, but we did have a few that met our screener criteria that we were forced to keep on our chart because that's what the trading plan says to do. This is purely objective trading, and then we track our statistics and let the statistics tell us, is this working or not, what changes need to be made, that kind of a thing. So FRO was one of those stocks that we were looking at but never gave us our setup. And then KZR was the one that we took a trade on, and you can see now is down well below 5%, but was above 5% when we were trading it. So let's take a look at the video and we'll see what happened. There was another stock as well that I was watching that almost kind of tricked me into a trade, and then I realized the chart pattern did not meet our criteria, and I'll show you that as well. So there's FRO, and then UEC was looking kind of strong here and was meeting our initial requirements to look for an entry. Well, I should say the tops of the candles were, and then once I pulled it up on the big chart, getting ready to possibly take an entry, I noticed that this is not our setup because the pullback from the first high of day, which is right here. So this is the first high of day after breaking through the previous high. They're very close together, but that doesn't matter. And then it pulls back down below the bottom of the previous low, basically. So that's a sign of weakness. And basically, that's just not part of our plan to take a trade like that. This would have to be higher than this low. So once I realized that, I just disregarded this as a trade possibility. And you can see what it did. Not saying that this is a guarantee, but it did end up failing and just getting weaker throughout the day. So anyway, FRO was coming up near its pre-market high, and it never really broke over it. Actually, never broke over it. So that one just did not trigger a trade. And then WOW, again, this was just one that just didn't, it met our screener criteria, but never met the chart criteria. And let's see here, KZR. So this is the one that I took a trade on. And this is one of the worst entries I've ever made in my trading career, or at least since I've been trading like this. I'm not sure, well, I don't know what happened. I know there was a delay. I was a bit distracted. Again, all of that stuff is my fault. But it happens sometimes, and this is the human side of trading. And this is why back testing is not that useful, because back testing assumes that everything went perfectly, that you got to fill without any slippage, that you didn't hesitate whatsoever. And this kind of thing rarely happens to me. In fact, the entire time we've been testing, I don't think I've kind of flubbed an entry this poorly. I have been late on entries, maybe like a half second, maybe a full second, but this one felt way slower, and it is what it is. So what happens when you do this and you end up in an entry that was, I wouldn't say unintentional because my entry was triggered, you just have to stick it out. This is a chance to exercise trader discipline. Sometimes these flubbed entries end up working out as well. So you really never know what's going to happen. So the best thing to do is to just stick to the plan, because what's done is already done. So instead of freaking out, breaking your plan, deciding to just sell out wherever, and then maybe you jump back in, it's just not a good situation. So best thing to do is to just try to recover from the mistake as quickly as possible. And the way you do that, and I'll show you the entry in just a moment here in detail, the way you do that is by getting right back on track on your plan. So and I'll explain that. So let's just look at the entry here. So what I was trying to do was getting ready to enter for the break of this candle. And let's see, let me just wait till I'm kind of hovering over it. I think, yeah, so actually I'm looking for this candle to break over the top of this one right now. I'm looking for 1745. But then what I did wrong was I wasn't keeping my eye on the clock down here. So you could see that this candle's almost done forming. And that's something, you know, normally I'm really good at, but this week I just haven't been trading a lot, and I think that's caused me, you know, to get a little bit rusty. I just haven't been available to trade much. I only traded one other day this week, so it is, you know, this kind of thing happens. So now you can see we have a new candle, and it looks like it's already broken over the top of this one. The high of this one is actually, I think, 1740. I think this is what confused me, because you see 1744 up here still. So yeah, I don't, maybe it wasn't really my fault. Now you see the 1740. So there was a delay in this updating. I do need to update Weeble. There is some bug fixes. I've never ever noticed that happening before. So I'm not sure what happened. But again, things like this happen once in a while. Again, I'm backing up a little bit. You can see how I'm hovering over this candle. It says the high is 1744. And then when I go forward here and we hover over that candle again, trying to get, I'm going to have to play it in real time to show you. So 1744, we're hovering over this candle, but you'll see that number change the next time I hover over 1740. So you might have to, there we go, 1740, right? So I think that's what threw me off when I was trading live. I was looking at this candle thinking, wow, 1744, okay, I still need to wait for 1745. And then all of a sudden this thing popped, and my rule is if I'm waiting for 1745, for example, and it goes higher and I don't get the chance to get in, maybe it just jumps up a few cents, I have to execute as soon as possible, because usually that's a sign of strength when you get some slippage on the way in. So those trades tend to work out. But as I said, doesn't matter. It is what it is. Once you've entered the trade, you just have to kind of stick to the plan as 100%, not as much as possible. You have to stick to the plan completely. So what that means in this scenario is that my stop loss has to go exactly where it would have went had I gotten the ideal entry, and that is below the consolidation area. This is an obvious consolidation area because if you draw kind of a trend line on the tops of these candles, you're going to get obviously a down slope or a descending trend line here. And then if you start here, you're going to get an upslope. So that's basically how you can tell that this thing is consolidating. So anyway, yeah, the stop loss has to go below the low of the consolidation, and I do place it there. And then we just have to let the trade play out. The 2-hour profit target also goes in the appropriate position. Now, there's a very important thing that I'm going to do here in just a moment. Well, actually, I show you the screener here first to show you where this thing is on the screener. So you can see that in real time, because this is something, the screener I'm looking at on my laptop, so you guys never get to see that. But there you go. There's KZR. You can see that it's up over the 500,000 share volume requirement. This is organized by volume, and it's over the 5% threshold. So it's meeting all of our criteria. And so now we're in the trade and we have our bracket orders out. So we just let the trade play out. And it's also important to mark out the moment where I think this stock is weak, and that's where the price comes down below this level. You'll see me place a line on the chart because that's the bottom of this ABCD pattern. So here I get stopped out, which again is expected based on our statistics. We know that our first trade fails about 75% of the time, but we're going to keep taking it until we get to 100 trades, because that's what we've been doing from the beginning. So we can't change the system in the middle of tracking the data. Otherwise, our data is all messed up. So anyway, this level, 1694, is where I would consider the stock to be weak, because this is the bottom of this ABCD pattern. And if the price breaks down below that level, that's enough to tell me that there's not enough buying interest here. So that ends up being what happens, so that we only end up taking one trade today. And that's because whenever that level is broken, my plan specifically says to stop trading for the day, because the stock that we chose didn't do what our plan requires, and we can't just jump to another stock because that kind of resets all of our statistics. Now we're entering trade number 1, which is again likely to fail. The best thing to do when a trade completely fails like this is to just walk away, and that's what we did. So it's just a -1 hour day. It doesn't change the statistics that much. I didn't record all of the details for the trade, but I did input that it went to our stop loss, so that our results are updated. So again, if we hold till 3R on all of these trades, even taking that first trade, we would be up 16R. And if we skip that first trade, we would be up 24R. So that's 24 times our risk, or 16 times our risk in this scenario. And number of trades, 86, so we got 14 more to go. This is our win rate, and this is just the 2R win rate, so that's basically 35%, which is profitable. 33% is break even. The win rate for 3R is a little bit over 28%. 25% is break even for 3R. And you can see our entry statistics. So there's where trade one is kind of failing right now. And it needs to be at least over 25% for us to consider keeping it, because we are going to hold till 3R once we trade full position size. So that's pretty much it for today. I think the key takeaway from this video, from this trade, is this was a great opportunity to exercise discipline and to stick to the plan. That's the great thing about losing trades, is they test your discipline. And if you can maintain your discipline, then you have grown your integrity, you've grown your strength and discipline, if that makes sense, as a trader. And that is really an invaluable tool, because the one thing that causes most traders to fail is just lack of discipline and the lack of the ability to stick to the plan. So that's what we did today. So it's still a very successful trading day, even though we're walking away minus 1R. So should be back on Tuesday for more small cap trading. As always, go into every single trade with a plan and stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.